Hey everyone, welcome. So, if you're grinding away prepping for the CPA board exams, or maybe you're just trying to survive your intermediate accounting class, you know the struggle. We're about to tackle one of the biggest hurdles out there, financial statements. And we're going to do it in a way that actually sticks, not just for next week's quiz, but for the long haul.
You know that feeling, right? You open up an annual report and it's just bam! A wall of numbers, crazy jargon, and tables that look totally overwhelming. It's so dense, so intimidating, and yeah, it is super easy to feel completely lost.
Okay, but what if we just reframed the whole thing? Instead of trying to memorize a bunch of rules, let's start thinking of these statements as a story, like a really detailed story about a company's life over a certain amount of time.
Yeah, seriously. In this story, you've got heroes, maybe that's the cash coming in. You've got villains, like mounting debt. And you definitely have a plot, with profit being that exciting climax. Once you start to see that plot, all those numbers, they actually start to make sense. And here's the best part. You don't need a whole ring of keys for this. There is one single, super powerful concept that everything, and I mean everything, is built on. If you can master this one idea, the entire story just unlocks.
So, what is this master key? Well, we're calling it the golden accounting equation. And trust me, this isn't just another formula to memorize. This is the foundational law of the entire accounting universe. Think of it as your ultimate study hack, because everything else is built right on top of it. Officially, it's called the basic accounting identity. And that word identity is the most important part. It means it's a statement that is always, under every single circumstance, true. It cannot be broken. A company's assets will always equal the sum of its liabilities and its equity. No exceptions, period.
And breaking it down into simple terms is, well, it's everything. On one side of the equation, you have all the stuff a company owns. And on the other side, you have everybody who has a claim to that stuff. It's a perfect, beautiful balance.
So first up, we have assets. This is all the good stuff, right? The resources the company controls that are going to bring in money later. We're talking about the cash in the bank, the products sitting in a warehouse, the buildings and the machinery they use, all the things it owns. Next up, liabilities. Now, this represents the claims that other people have on the company's assets. Basically, it's everything the company owes to others. Think bank loans, bills from suppliers, all its debts. And finally, equity. This one's simple but so important. If you took all the company's assets and sold them to pay off all of its liabilities, whatever cash is left over, that belongs to the owners. It's their true stake in the company. Okay, so now that we have our golden key, let's use it to open up the 4 main chapters of this financial story. And remember, these aren't just 4 separate reports. They're more like 4 different camera angles on the exact same business, all held together by that one core equation. First on our list is the balance sheet. The best way to think about this is like a photograph, a snapshot. It captures the company's financial position, all its assets, liabilities, and equity on one single day, like the very last day of the year. It's not about performance over time. It's a freeze frame of a moment. And look at this structure. It's literally our golden rule laid out on a page. The total of everything on the asset side it must perfectly equal the total of the liabilities and equity side. Always. So if the balance sheet was a snapshot, the income statement is a movie. It's not about one single moment. This statement tells the story of how a company performed over a whole period, a month, a quarter, a full year. It answers that one big question. Did we actually make any money? And the storyline is super logical. You start at the top with revenue, all the money that came in from sales. Then you just start subtracting all the costs it took to make that revenue, step by step. And what you're left with way down at the bottom is the famous bottom line, net income. All right, time to put on our detective hats. Here's a little secret. A company can report a huge profit, but be totally running out of cash. Crazy, right? Well, that's because profit isn't the same as cash. This statement, the statement of cash flows, ignores all the fancy accounting rules and just follows the cold hard cash. It shows you where the money really came from and where it really went. Our investigation has 3 main case files. First, operating activities. This is the cash from the main day-to-day business. Second, investing.
cash spent on big stuff like factories, or cash that came in from selling old equipment. And third, financing. This is cash from taking out loans or selling stock to investors. And our final statement, this one is like the owner's personal diary. It spells out exactly how the owner's piece of the pie, the equity, changed over the whole year. It starts with what they had at the beginning of the year, adds in the new profits, and then subtracts any money that was paid out to them, which we call dividends. Okay, this next part is absolutely crucial. You have to remember these are not separate stories. They are deeply, deeply connected. And honestly, understanding how they all link together is what separates the people who get it from those who don't. It is a major key for your board exams. So check this out. The whole plot begins with net income, the bottom line from our movie, the income statement. That profit belongs to the owners, right? So it flows directly into our diary, the statement of changes in equity. This gives us a new updated ending equity balance. And for the grand finale, that updated equity number gets carried right over to our snapshot, the balance sheet. And that's what makes the whole thing balance out perfectly. It's one big loop. Phew, okay, that was a lot. So let's lock it all in for the long term. This isn't about last-minute cramming. This is about building mental hooks so you can pull this information up when you're under pressure. So here's a super quick review of the main takeaways. Just remember these 4 metaphors, okay? The balance sheet is the snapshot, the income statement is the movie, the cash flow statement is our detective story, and the statement of changes in equity is the owner's diary. Seriously, just using these metaphors will make everything so much simpler. And whatever you do, never, ever forget the golden key. Assets equals liabilities plus equity. It is not just a formula you memorize, it's the law. It's the unbreakable law that runs this entire universe. Every single number has to follow this one rule. So you've got the framework now. You know how to read the story. The only question left is, where are you going to use it first? Go pick a company you actually care about or one you're just curious about, find their financial statements, and start uncovering the plot. You got this. Good luck.